Hey, okay, we about to break down the VA loans. Owns. Okay, that's my debut. So let's talk about VA loans, okay? VA loans are really good. Now, what are VA loans? They're specifically for veterans. So somebody who's actively serving in the military or somebody who was discharged. Okay, does not apply for anybody that was dishonorably discharged. Now, good thing with VA loans, they are typically the best loans in the market. I love doing them. They're pretty much a slam dunk. Things to point out for a VA loan. VA loans, you can obviously buy a home without putting any money down. So you could finance 100% of the property without putting any money down. They're always going to have the best interest rates on the market. So they have better interest rates than conventional loans, and they have the same interest rates as FHA loans. The good thing is they don't have any PMI, which is called private mortgage insurance. And we'll get into that with FHA loans. Now, another good thing with VA loans, they're assumable. So if you want someone to take over the property, like a family member or a friend, they could assume that loan that you got through the VA. You can't do that with any other loan. You can't do that for conventional loans, and you can't do that with FHA loans. So that's a very big thing to have. Anytime you do get a VA loan, the first time you get a VA loan, the process is a little bit, harder to get. But after you do, get your certification of eligibility, you go through the process, getting qualified for the loan. Anytime that you look to refinance again for the VA, if you want to do just a rate in term, so what that means is just dropping down your interest rate, which is dropping down your overall payment, right? So if you drop the interest, you're dropping how much you paid to the mortgage. Now, anytime you guys look to do that and you're already in a VA loan, looking to get another VA loan, it's a very easy process for you, okay? It's called a VA IRRRL Streamline. Now, what that means is your current loan is a VA. Now, since you already set up a VA loan, all that we would be doing, we would be certifying that you are in that VA loan and you're still eligible. From there, we just need 2 documents. So literally any award letters that you have in a mortgage statement. Okay, super easy, super simple. 2 to 3 weeks and you could get a loan closed. Another good thing is we have to drop the interest rate at least 0.5%. Okay, so 0.5%, and there has to be minimal cost to the loan. So that's why it's always good to have a VA loan. Again, its benefits are, our soldiers, which we should be, and it's just an overall solid loan. So anytime that you look to do a refinance or purchase a property, if you have a veteran status, I would use that every time when you buy a home. And even if you are looking to be an investor, if you're trying to house hack, and if you're a veteran or if you're older as well, you could always rent out other rooms as well. So you could use the VA as an investment strategy. Just like the FHA loans where you could put 3.5% down, obviously you could use a VA with no money down, rent out the other rooms. Once a year passes, go into buy another property for another VA loan and just start the process there. So I think it would be a good investment tool for any young people who have veteran status or an active military. Just an idea that you can use in order to invest in properties. Another important thing to note, there is a funding fee. So there is the VA funding fee. Now, anytime that you guys see that, again, you guys are going to get a loan, disclosures showing you a whole list of whatever, cost is for the loan. Now, anytime you see a funding fee, that goes directly to the VA. That does not go to the lender, that does not go to the bank, that does not go into my pockets, which I wish it would. It does not go into, my boss's pockets, which he probably wishes it would. It would go directly to the VA. Now, it's important to understand that it's going to be a percentage of what your total loan is, okay? One way to offset that is if you have any disability. So if you have a disability of 10% or higher from the VA, you could waive all VA funding fees. VA loans are typically the best loans on the market. Not only because you don't really have to put any money down. If you do, that's good. You have the lowest interest rates on the market and the lowest cost on the market. Again, it's an assumable loan. You are always able to refinance again after 210 days, which is a seasoning period, okay? You have to wait 210 days to refinance another VA loan within the same property. That's always important to understand as well. So if you want to just reduce your payment and rates drop, 6 months from your first purchase, you can look into refinancing and looking to drop down your interest rate 0.5% or so. Just dropping your overall payment obviously would help out. So it's always good, if you have that status, use it. I would use that for every property if I was a veteran, which I'm not, unfortunately. Any questions, feel free to shoot me a comment, DM, whatever the case is. I'm here again. Bigger Brains community. We're growing. We're growing substantially. So I look forward to helping you guys out with more questions if anything pops up. Again, I'm here for you.